All right. Good morning, guys. My name is Scott Redler. I am the Chief Strategic Officer of T3Live.com. Welcome to today's 6:30 Club. Same 6:30 Club we had last Thursday, last Tuesday, 2 weeks ago, all the way back to the pandemic. Doesn't matter what the market's doing. It's the matter of your technique, your formula, your process, your time frame, your multiple plans, your execution, following your rules, knowing some rules, knowing your X's and O's, and being in the right frame of mind to actually, put trades on, take trades off, not have FOMO, and just continue to move forward. I've been doing this since 1997. So, granted, I have a little bit more experience than most. That's why you're tuning in. So I can keep you safe, I can keep you profitable, and I could, be a little bit of a guiding hand, which is what I've been doing here for a while. So, anyway, let me quickly say hello to some of my dogs around the world who are tuning in. We got Scott Myers in the house. We got Caracas in the house. We got Tony. We got Blair. What up? What up? We got Joe. We got Hayden Morton. We got Sam. We got the space specialist. And then we got Tapan. All right. I'm not going to harp on too many things because we have too many things to go over. But the bottom line is, if you Google Scott Redler, Google moving averages rules. I've been talking about this for decades. When you're below the 8 and 21 day in the S&P or the S&P cash or the SPYs or the Qs, as a trader that gets paid monthly or quarterly, you are not sitting in swing positions. You are not in a portfolio approach. You are actually tactical. Maybe you have options on. Listen, I have some options on. I had Amazon 202 options on, risking $1.50 to make 8 that are a zero, but who cares? Better than buying thousands of shares into earnings, holding my nose and going underwater. We don't do that. That's also why we don't take stock into earnings. We take options because risk is premium paid. And the bottom line is when the S&P is below the 8 day, it could hit the 21 day, it could hit the 50 day, it could hit the 200 day. You never know. Nobody thought Japan would be down like 7-8% on Friday and 12.5% last night. So it's 20% in less than a week. Anything could always happen in the stock market. You want to make sure you do not blow up. You stay in the business. You follow your plan. And listen, if you have a 401k and you're 51 like me, this does not matter. Make sure to put your money in, keep it going. Long term, the bull market will win. This also will pass. And for those of you who use the Blood in the Street account, which is an account that I have, which is all cash, which is also a long-term account, you guys have been bullying me to put it back in with 2% off the highs, 3% off the highs. When are you going to do the BOS account? I'm like, this is not Blood in the Street, guys. This is not even a 5% correction. Usually, it has to start at 10% before I leg in 3-4 tiers. But anyway, I did catch a little sun. I was in Montauk this weekend with the family. So, yes, I'm allowed to do a little vacation. But guess what? I friggin' woke up at 3 o'clock in the morning and I drove my ass home. Okay. I left Thursday afternoon, managed from the road on Friday, managed the trades, had some fun this weekend. And boom, here I am sitting in the office taking care of business. That's what men and women and everyone does if you're disciplined. You go out, have a good time. You can go out with the boys, but you got to take care of your business, especially now. A lot of volatility. So anyway, let's go to the chart of the S&P cash. All right, here's the S&P cash. If you look at it, when you look back, it's always easier. It's always easier, but you always have to look back so you can learn from the past, right? If you remember this ascending channel here, we had this gap down and broke. That was your first signal. And that was after the semis already put a top in. That was after the Qs put in a top. So why wouldn't the SPYs come down? I think we've called all three tops to be quite honest. But anyway, you had your first move lower, and then we came back up. It was a little odd. It was really last week was kind of tricky. It definitely was. They gapped the market up on Fed Day, and kept it up all day. But then at least on Thursday, everyone was in the same position. Okay, to trim a little bit into strength if you happen to have been in some risk, or look to reshort. Or you could have seen this red dog reversal sell, which everybody knows. You trade above a high, come back below it. You could short there, or that means adjust your size. And then look at this bearish candle that happened below all three moving averages in one swoosh. That's not bullish, boys and girls. That's bearish. Anyway, we came into the 100-day on Friday. Everyone's like, Red Dog, time for the Blood in the Street account. I'm like, guys, it's August 2nd. Why am I putting the Blood in the Street account to work? This is a long-term account that I want to, come in when there's blood in the street. And guess what? Today, there's a little bit more blood in the street. I'm not smiling because I'm sure there are a lot of people in pain out there, and these type of days are very complicated. So I don't wish any pain on anyone. I just wish a strategic plan and process that you could learn so you could avoid pain and profit and be opportunistic. Today, I come in really opportunistic because I'm in tons of cash in my active swing box, every account, and I'm ready to test levels and hopefully maybe catch a nice little reversal either today into tomorrow into the right levels. If you look here, I thought 52.64 would be a spot, but guess what? Okay, I don't trade futures because I need to get up at 4:45, so I need to sleep. So I don't have the opportunity to buy it here. Now, we're getting closer to to lower levels. So at this point, I'm gonna go with the SPYs because you could see it. All right, so here's the SPYs. Again, lots of ways to maneuver, lots of ways to get out of the way, get short, get whatever it is. Starting from this ascending channel, this gap never got filled. Here was your red dog reversal post-Fed day, gap that never got filled. So this was 524. I thought maybe if I saw 524, I would start buying it on Friday or selling some puts. Thank goodness it didn't happen. Here's 521. And now, right now, the SPYs are down a lot. This is a pretty big down open. I haven't seen a down open like this in a while, which is fine. That's why, it's good to be in pretty much 98% cash in all four of my T3 prop accounts that I get paid quarterly on. I have a little, options on that are zero, but I also have 535 puts on that, covers that and then some. I'm actually going to make money. I'm making money into this down open, but knock on wood, whatever. So here's 517. So this is 515. There's a gap right here at 513. And then, you know what? Here's the 200 day. At this point, it's almost like, why wouldn't it get to the 200 day, which is closer to 508? I'm not saying it's going to happen today. I'm not saying I'm not going to try and test levels between now and then, but you know what? This is like compelling. If we were to get down to like 515 or less, maybe on Wednesday I sell like the 508 puts, so I don't mind buying it here. And the VIX is spiking, so there's gonna be a lot of premium there. In a sea of red, you don't focus on the bull-owning names. You don't focus on second tier, third tier. You focus on the leaders. I will only be trading probably the SPYs, the Qs. I'll probably be looking at the Soxel, which is a little bit of a leveraged long in the semis, Nvidia, and Apple. Those are the five things, if I wind up trading them, I'm going to put on, and I'll look at a lot of things, but those are the five things. You don't want to be scattered. You want to be specific. You want to know your levels, and you want to be able to execute. So right now we're at 516.72. I don't own one. So this is the virtual trading floor, by the way, which a lot of people get to see. So I'm in 535 puts, which are really nice. Okay, that'll cover the little leftover Amazon calls that I played. I have a little bit of this biotech I have on for the fall. And then this didn't work because crypto got hit. This didn't work. And these are all leftover options that are already a zero that didn't work. And I have this FTEL on, which is, has a registration coming on, what's it called? I think the 8th, and the stock should be worth $1, but that's not for everyone. I've had it on since 35. Anyway, and I also sold some premium. So I usually, when you guys tune in and we're in a healthy market, I'm in like 15 longs, stocks also, not just options, Apple, Amazon, Netflix, you name it. So it's good to be tactical. It's good to follow your own rules. Thank goodness I'm following my own rules a little bit. Anyway, good morning, Catalyst. Good morning, Mike. So we'll see. I think now, that we're getting some price discovery. This 515 is a spot, and then you have the gap here. Just remember, not saying it's going to happen. We're down 3%. Japan was down 12%. So that is like, wow, 20%. It's a very mature market. They got very complacent. And that was their first, I guess they just stopped out all the stops. I'm sure there are some people who have a margin calls here too, but not at T3 or on the 630 club. But anyway, so here, this is your interesting area. 515, 513, and this is really compelling, 508.50. And today, I will be putting my wife's Blood in the Street account to work. She's in all cash in a 4.2% rider. I've put it to work 16 times since 2018, and today the first tier will go in. But I have 3 more tiers, meaning if all of a sudden, today we close near the lows, we're down 10% from the highs, that'll be the first. Then I wait. I don't put any more money to work in her longer term account for at least another 5% or more if that happens. Other than that, trading for a living is different. It's August 5th, and we got to make money daily, weekly, so we can get a check to start, in the end of actually, I'm quarterly, the third quarter. So anyway, that's that. So with that being said, I think what you got to watch, a key name, is going to be Nvidia today. There was some news out there that their chips delayed by a month. At this point, you had a high, a lower high, another lower high, a red dog reversal the same day at 118.34. That what's it called? That happened on Fed Day, and I don't want to share it today. I will be probably selling puts in it. I'll be buying calls a few weeks out. This is 97. Where's Nvidia right now? Nvidia basically just filled this gap. Okay, so let's make this a little bit smaller. Nvidia filled this gap here from 97. Okay, and that's where it is right now. It's at 96. So if you're short, I would cover some, and from here, I would think here's your 200 day, 87.80. Okay, so what I will do is I'll wait for a 15-minute low, and I'll probably try and buy some versus that. If it starts to accelerate lower, I'm probably have some orders in from like 92 down to 88 in my swing account. I won't mind buying 92 to 88, but I can handle that. You can either wait for it to actually give you a signal, or you can have some, some bids in there just in case there's a big, crazy, sloppy seller, which there might be because there are a lot of people who are definitely caught in this thing and didn't follow their rules. What do I mean by the rules? Well, here's that top that I was on with Liz claiming. Here's your lower high. Here's your red dog reversal. Those are all tactical, not be long, get short, be out of the way candles or trades or days. And now, today to me is exciting. I'm excited today. Today's going to be one of those days like there's going to be a lot of things going on. It's not going to be easy, but these are the days where, you have to capitalize. It might not even rally. Who knows today? Maybe into tomorrow. But I think if you position in some options for the end of the week, you start legging in carefully into this 515 or below, or 92 down, or wherever that 515-minute low is, you're probably going to be able to make some money. What is the reason for Japan and the sell-off? James says, well, they've been in an easy money environment, I think, for a decade. And then last week they've raised rates by a quarter for the first time, and that popped their bubble. So I'm not a macroeconomics guy. I'm not going to claim to be, but I know that they've had rates at like zero for even longer than we did, which helped spur whatever it is that spurred there. And then raising in a quarter was a shift, and that's what caused, part of that with the yen, etc. Anyway, but things aren't so rosy here either, but we're not going to get into that. So I would say this is the gap fill. This would be like, I will be diving in with two hands, buying Nvidia, anything under 90 pretty much, if we see under that today. Not saying we're going to, but if we do, I will be buying a friggin' ton. And probably on the way down, I might even be buying some, some options. Okay. Mike says the largest yen carry trade unwind in history. Okay. Yeah, that's what happens when, and kind of like their flash crash. Remember when we had our flash crash where we rallied from the financial crisis lows of 2008 all the way through into like 2012 plus. I don't remember the exact year of it. And everyone got really complacent. Then that one down move, that one correction that turned into that flash crash at 210. I think I was in the Wall Street Journal for that. But anyway, so that's what's happening in Japan right now. So Nvidia, you don't need to trade MU. You don't need to trade Taiwan Semiconductor. Trade the SMHs or watch the SMHs and trade Nvidia and maybe the Soxel if you can handle it. Do not be spread out today. I will also be looking at Apple. Apple coming back into this area. I don't own a share of Apple. Okay, Chase still has it in his account. Yeah, he does. But we were long it through this 198, 199. Had a great trade, had a great bull flag, and then was done with it here. Haven't traded Apple since. Today, I'll be trading Apple. You know why? There's liquidity. There's a buyback. There's the whole 9 yards. It could be a safety trade. It's coming right back into this 198, 199 area. Okay. And at some point, the 200-day will move up into this spot. I think it's a good buy. I don't care that Buffett sold 50% of his Apple. You know what? It's good. He's out of the way now. But he listen, Buffett's the best investor in the world. He bought Apple when nobody really wanted it. He bought Bank of America and Goldman Sachs during the financial crisis, and he just sold a lot into strength. He's also 90 plus years old, so maybe he's getting some liquidity so his other PMs could pick and choose where they want to live. So anyway, this Apple to me is worthy of a spot. It starts to get a little bit below 200. I will be buying it This is your 200. This is your, this is your 200-day down here. This is a compelling spot. This, I do think that Apple's gonna, have the foldable phone, the AI phone, this and that. Bottom line is that's, as an investor thinking, but as a trader thinking, this is something I'm going to be focused on. Okay, into this zone, I will be a buyer. I would not be a seller. Okay, and I don't have one share of Apple on my VTF from here till about here. I had stock, I had options. We were above the 8-day. Above the 8-day is strong, and you could have even wrote it out longer than me. And right here, get out of the way when that broke. So either which way, if you're tactical, you got to be tactical. Buffett owes Japan. What? Anyway, with that being said, he sold 50%. It's still his largest position. But and again, he sold it into strength. Buffett's a maniac. Good for him. Anyway, with that being said, I think Apple should be something that's front and center for you. And I do think if you're going to trade something versus areas that you might get stuck in, I like that. Okay, I like Apple. Trade the SPYs, trade Apple, trade Nvidia, watch the SMHs, and then other mega cap or Mag 7 names. I have no interest in Netflix. It's too loose and wide. I will look at Microsoft. Microsoft has come in a lot. It had a lot of it broke its ascending channel here. I'm not a Microsoft. I've been in a bunch of different ways. It broke its 8-day here. Hopefully you got out of it when it broke the 8-day moving average, because that's one of Red Dog's rules, and it's been below ever since. So now, quite the thing is, though, this is already, like if you think this already got to the 200-day. So Microsoft, which is one of the leaders of this big, awesome rally, is already through the 200-day. So it shows you other things could do that. Anyway, this is 388. Let's see, where's Microsoft today? Microsoft is down 18. This is a spot. This is where it was after hours. Okay. Here's 389. This is 388. So this is also a spot. So 384 to 388 is a decent spot here, I think, for Microsoft. So we'll see. But just so you guys know, also, if we do get a tradable low in the market, today, tomorrow, doesn't mean it's going to be the summer low. But anyway, did somebody call the summer top? Red Dog. Anyway, 384 to 388. This probably is a zone that if you're short, you cover. If you want to buy it, I think it's, if you sold it into strength or got out here, this is a good spot. So Tesla, okay, Tesla's back to where it broke out from, if you guys remember. Okay, we played Tesla when it broke above 198. Yeah, sometimes, this likes to go up in a sea of red. This is all I have to update. I am not in Tesla. So if you were thinking, hey, where's a good spot? Okay, this is actually, it's through that. I remember we played it through this 191. Okay, so that is a level. It's just, not as, I just think I would rather you guys be playing Microsoft and Apple versus Tesla. But if you're, you have to play Tesla out of all of them, this 191 area is a spot. Look at this big earnings gap that never got filled that gave you the direction. Look how this, people like, if you're caught here, this candle right here below all the moving averages, Tesla is a momentum name. When momentum names are below the 821 day, you don't sit in them if you're a tactical trader. Anyway, so here we are. Where's Tesla right now? It's getting close to this, this spot right here. This is 192. So yeah, I think that Tesla is probably a better buy in this spot, especially if it was just a 270 than a sell. So there are some things you could test in these areas. What's the SPYs doing right now? Still 510. So yeah, actually some juicy levels here today. I'll tell you. Today could definitely be a good opportunistic type day, in my humble opinion. I'm going to be trying to look for things to buy and trade. But again, pick and choose your battles. Don't be trading, some tier 2, some tier 3 stock, and you're buying it. Don't be trading. I don't even know which ones people are trading in the mid levels. Whether it's a Square or just saying, or even coin. But anyhow, Bitcoin also broke the 821 day. Okay, so I was in IBIT up until last week, and I got stopped out last week. And everyone's like, "Right, dog, I thought you were a Bitcoin fan." I'm like, "Yes." I said, over time, you could accumulate Bitcoin, and in a decade from now, it's going to be a lot higher. But I said, if you trade actively for a living, it broke right here. It broke literally this was your red dog reversal top right at 62-ish is when I get out. Okay, I'm like, nope. I'm like, it just broke this upper area. I'm tactical. I'm not going to hold it anymore in my swing trading account, which the Alpha team sees, and that just saved me all that damage. So there's always ways. Look, Bitcoin went from 58 to 62 to 70. It just pulled in and held 62. Some use that as a stop if they're active, and that's me active. So now it's below the slower end of the range. Yeah, Bitcoin is going to be something that I don't focus on today. I'd rather focus on the Qs. I'd rather focus on the SMHs. But if you trade crypto, actively, you should have got out right around here. And now it's below this range. If it stays below this range for a little bit, it might take a lot longer than you would have thought. But anyway, Meta, I think Meta is decent. It's just, to me, Meta is very loose and wide. And thank God, remember I told you we got out of those options. You always have a little bit of time. Meta just, and look how it filled this, by the way, it filled this earnings gap. So basically it showed you it wasn't special. I wasn't here on Friday. I got rid of my Meta shares on Thursday, actually. It's fine, but it's very loose and wide. Meta was hard to trade when the market was a little, more relaxed. And now it's like, okay, you could trade it and look at it again. And it had decent numbers. So it's something you could look at. What's Meta doing today? It's down 27. It's at 460. So here you are at 460. So it's above the recent low here. It's above the 200-day. Yeah, 440-ish. It's worth a look. Okay, I'll glance at it and see how it's acting, but I'm not going to be probably trading it. But right now it's 653. All I'm going to say is this: everyone's had multiple plans to adjust their day trading account, their swing account, their option account. We had the top in the semis first, the top in the Qs next, the S&P followed. We were below the 8 and the 21. They even had last Thursday on the jobs report. The jobs report was not the jobs report. The Fed was Wednesday, and then Thursday reversed and gave you more than enough areas and ways to adjust. If you didn't adjust, it kind of sucks and I feel bad, but it is what it is. Hopefully, you're handling yourself. If you have a 401k and you're 35 years old, this is fine. This will help your average cost. I'm 51 and I'm not worried about my 401k or the 403b, or my son's going to be a sophomore in high school. I'm not worried about his 529. These are long-term accounts. You put money in every single month. Now is not the time to start liquidating things, longer term. And if you trade actively for a living, those are other rules. There are rules everywhere. Even the IWM. Okay, I'll leave you with, remember, it broke above 226 and failed to hold it. That means it wasn't breaking out. That means Tom Lee 40% rally rule was not intact. And then when it broke 220, that was just cooked right here. There's always ways. Here was your loose and wide 226 failure, and then it broke this the next day. If you were in the ETF, you get out of the way. If you had options on, I had some options on. They were zero, but who cares? Risk is premium paid. You have 10, 20, 30 calls on that are $1, $2. You lose money. But if you have 3,000 shares and you sit through this whole thing versus 30 calls, that's not risk is premium paid. That's down a lot of money. And now the IWMs are opening to 198. I don't even, I'm not even going to look at the IWMs, to be honest. I'll look at them, but I'm not trading those things today. There's no, it's coming into an area. This is 200. So the 200 day is right here, just like that, right down to the 200 day. Tom Lee's doubling down. All right. Let him double down with his, whatever. I'm not going to get into it. Again, if you're going to follow strategists, and not follow your own rules, you're going to lose. Those guys who thought Mike Wilson was a celebrity because he called one corrective phase, then he fought the last bull market for a year and a half. Yes, Tom Lee's been really good, and I like someone who's a little bit more bullish, but you have to take it with a grain of salt. Even when we're up here, I'm like, guys, we're not going to 250, 280. You'll be lucky to get to 232. So if you have a realistic, pragmatic approach in the market and in life, and you know what you can handle, you'll go a lot further than falling in love with analysts who you think are, rock stars are that good, because they're just not. Some of them don't even have skin in the game. They get paid to just write notes. But anyway, you're a trader. You trade for a living. That's what you do. So you got to have your process. And yes, there are a lot of great traders out there, but even me, you don't follow me to a T. You take what I say, you formulate it and align it with your plan. And if it works out and you have conviction in it, hopefully it helps you. So anyway, I got to jump. I have a lot of charts to do. Today's going to be a crazy day. I wish everyone luck. You probably should be on the Alpha team, with probably 500 of the most experienced traders in the world, in my humble opinion, and that would help guide you. And, there'll be a lot of volatility the next few weeks and months, which will be great for trading. And hopefully you'll be able to embrace it versus getting caught in it, because that's our job. Good luck today, guys.